I
Okay.
first want to take a moment and welcome everybody and say thank you for joining us. Our Business Builder Speaker Series is the third Wednesday every month from 1 to 2 o'clock. We bring great industry experts for tips and tricks to help you grow your real estate business, important information that you need to know. We encourage you to stay connected with Shay Fritz and Dean. We've got a list here of all the different socials and how to find us. Additionally, if you miss one of our Business Builder speaker series, if you go to our website, shafritz-dean.com, and click on the resource tab, you'll be able to find a list of our prior classes and review them. And here's a list of the Business Builder speaker series we've had year to date. We'll take today's session and we will clean it up, add the opening and closing credits and theme music, make it look nice and professional, and we'll have it posted in a few days. Mark your calendar for next month. The third Wednesday in August is August 21st at 1 p.m. We'll have our next month's speaker. Next month, we're going to have Cleve Hill, the managing partner of the Georgia Legacy Law Group, talking about avoiding probate in Georgia, strategies for an efficient estate administration, an overview of Georgia probate, why probate should be avoided, and techniques to avoid probate from living trust, beneficiary designations, and joint ownership. And that'll be next month, Wednesday, August 21st at 1 p.m. We know that you're busy and we thank you for giving us your time and joining us today. To make the most of your time, we encourage you to ask questions and participate utilizing the chat box. Chris, I'll monitor the chat box and let you know as we get some questions.
Okay.
I'd like now to introduce Chris Patterson, office manager and independent agent of Lone Mountain Insurance. Lone Mountain Insurance is a friend of the firm, and Chris is going to talk about what you need to know about residential insurance in 2024. It's a comprehensive look at today's insurance market, trends, and the economic impact to real estate. A lot of changes in real estate, and I'm eager to learn from Chris things that we should know about residential homeowners insurance. Chris, take it away. I'm going to stop sharing my screen and allow you to share yours.
All right. Well, hey guys, I'm Chris Patterson. Uh, Thank you for the introduction, Doug. Today, like he said, we're going to start with kind of discuss the residential insurance market in 2024. This is really across the whole country. We're going to get Georgia specific and then just sort of explain some things that are going on around the country that sort of have similar to do with what's going on in Georgia. So I'm actually going to start off by going over some tips and some policy recommendations for you guys to consider, and then we'll move on to the current state of the residential insurance market, where we are now, and where we expect things to go in the future. But first, just to reintroduce myself again, I'm Chris Patterson. I've been in the insurance industry for over 10 years now, and we opened our new agency, Lone Mountain Insurance Group, in 2022, and we're chugging along pretty well. I'm the father of one beautiful little girl, so I spend most of my time outside of work pretending to be the Cookie Monster and rocking out Taylor Swift. So that's kind of my life there. I'm not a claims adjuster, but I do have some experience on that side of things. And my family and I lost our house in the early hours of this past Christmas morning due to an electrical fire. So I'm a little bit more familiar with the total loss claims process and how all of that works. And, you know, obviously the important thing is we all made it out okay. And I did write my own homeowner's insurance policy. So I know we were properly covered, and that process has been a relatively smooth one. So, however, one challenging thing that I found out is remembering all the items that you lost in your home. And so I'm just going to take a few minutes and go through some things that you all can do to make this an easier process. Lord forbid if this should ever happen to any of you guys. And then I'm going to go into a couple other policy recommendations, and then we'll get into the current state of the market here. So The first thing to do is take inventory, and I know that sounds like a tedious process, but once you get it done, it will be easier to maintain yearly. So you can do this a couple different ways. Obviously, you can do written and make sure you have a firebox. You should have a firebox anyway, but if you do a written list, obviously it's less efficient, and you'll have to make sure you got a firebox for that. Obviously, you can do a digital spreadsheet, Excel, Google, create a detailed list, and then they actually have apps for this that you can do. So specifically, Sortly and Encircle are really good options as well. So if you're anything like my buddy AJ, he's very detail oriented, and he has a spreadsheet with every item that he owns listed on the spreadsheet. His family went through Hurricane Katrina and lost everything, so he's making sure he never has to hassle with that again. So here are some things that he includes on his spreadsheet. Description, what the item is, serial number if it has one, purchase date, when he bought it, purchase price, how much he paid for it, receipts, and he actually attaches photos of the item on his spreadsheet as well. Now, if you're anything like me, that sounds pretty tedious. So once we get back in the process and the rebuild is finished and we get everything back in there, I'm going to take video. Video recording will be a lot easier, and basically you're going to go room by room, cover every room in the house, including storage areas like the attic, basement, and garage. Open the drawers and closets to show everything that's inside, and you can even narrate and describe what you're looking at, including any details like brand names and unique features. And how often should you do this? At least once a year, or whenever you make a significant purchase or changes. Regular updates ensure that your records are accurate and you're adequately covered by your insurance. So I mentioned that my friend AJ went through Hurricane Katrina. That was not covered under his homeowner's policy. You need flood insurance for a situation like that. And let me get this thing off of my screen here. Hang on. There we go. All right. So umbrella insurance. Oh, wait, actually, I skipped ahead. Sorry. Flood insurance is exactly what the name suggests. Obviously covers damage due to floods and flooding, while your homeowner's insurance may pay for water damage due to broken pipes. Flood insurance pays for damages caused by the rising of a body of water that normally covers dry land. Homeowners insurance covers many types of water damage. If your pipes burst and flood your house, or your toilet overflows, or if rainwater comes through a suddenly damaged roof, homeowners insurance pays for it. It won't pay for it, however, if you were negligent, like if you had a leaky roof and you didn't bother to fix it. So flood insurance kicks in when water comes at you from over the ground, such as rainstorms, that flood your yard, lakes that overflow, or storm surges. So this is just something that I like to recommend to people because it's often overlooked, and this can happen. One bad storm, this could happen to you. So that's something for you guys to consider as well.
Chris, just two quick comments.
Yeah, go ahead.
One is I bought my first house. It's been 31, 32 years ago, and I still
Mm-hmm.
remember my real estate agent doing this with his hands about water. If water comes down, like the roof is blown off and water comes down, that's not a flood and that's covered by your homeowners. If water comes
Correct.
up, that's a flood and it's not
Right.
covered by homeowners, only by flood insurance. And the other
Right.
thing I did not fully understand at the time, and I understand better now, is even if you're not in a FEMA flood zone, you can still get flood insurance. And there are
Correct.
reasons that you should get flood insurance, even though you're not beachfront or in a FEMA flood zone, because
Right.
rising water can happen anywhere.
Correct. Correct. I definitely recommend looking into that. Especially it's better to be, safe than sorry, really. Honestly, that's kind of how I look at everything when it comes to the insurance world. So, um, another important thing that's often overlooked is umbrella insurance. So, an umbrella policy can be at various stages where liability coverage from standard insurance policies is insufficient. And I'm going to go through some kind of examples of, what is the types of things that umbrella insurance would cover, and just give you some kind of scenarios of that. So here are some examples. So you got your auto accidents. You get in a major car accident. Suppose you got, you caused a multi-car accident resulting in severe injury to several different people. The medical bills, lost wages, other damages exceed your auto insurance liability. The umbrella policy would kick in an additional amount, and that could be anywhere from starting at $1 million to up to five, whatever you need. Pedestrian accident, if you accidentally hit a pedestrian, leading to significant injuries and causing a lawsuit of medical expenses, pain and suffering, other damages. Again, if that exceeds your liability limits, the umbrella policy would kick in. You got home insurance incidents. So if you get a serious injury on the property, a guest at your home slips and falls, sustains severe injuries and medical expenses and potential lawsuits, again, that can wipe out your liability limits, and the umbrella would kick in at that point. A dog bite, if your dog bites the neighbor, causing serious injury or leading to a lawsuit for medical expenses and emotional distress, and all of that sort of thing that people claim, again, that umbrella policy would kick in there. You got personal liability, so defamation lawsuit. If you make a statement online or offline that someone claims is defamatory, leading to a lawsuit, the legal cost and potential settlement exceed your liability coverage, and then your homeowners or renters policy exceeds those liability limits, the umbrella policy would kick in and cover you there. You've also got false arrest. Say you mistakenly accuse somebody of a crime, leading to their wrongful arrest and subsequent lawsuit for false arrest and emotional distress. And, again, umbrella policy can kick in after that. Recreational activities. Say you have a boating accident, you're in a boat, and you cause an accident on the water, resulting in significant injuries and property damage. The liability limits in your boat insurance are exceeded, and the umbrella policy, again, would kick in at that point. Recreational vehicle, you cause an accident with your ATV, leading to severe injuries and property damage. An umbrella policy would kick in there if it exceeds your liability limits. Property ownership, rental property liability. Say you own a rental property and a tenant or a visitor gets injured due to maintenance issues resulting in a loss. Liability, landlord insurance may not cover enough of the damages, and again, the umbrella policy would kick in. International incidents. So say you have an accident abroad. While traveling abroad, you accidentally cause a injury to someone or damage their property. Your standard liability insurance may not cover incidents outside of your home country, but the umbrella policy often includes international coverage. Large gatherings. So you have an event and you're hosting a large party and multiple guests are injured due to, I saw something where people had a house party and they had a back deck and there were a bunch of people on the back deck, and then the deck collapsed, resulting in horrible injuries. That's a lot of money, and anything could happen, and if that exceeds your liability limits, the umbrella policy, obviously, that's what that's for. High net worth exposure. So if you're a high net worth individual, and you may be targeted for high net worth lawsuits. So an umbrella policy provides an extra layer of protection, ensuring that your substantial assets are safeguarded in the event of significant liability claims. And each of these scenarios, an umbrella policy serves as a financial safety net, providing additional liability coverage to protect your assets and future earnings from large and unexpected claims. So those are just some recommendations that people often overlook. And I just kind of wanted to go through that real quick with you guys, and then now we'll sort of get into what in the world is going on with these insurance rates. People are like, why can't I find coverage for my new home? Why is insurance so expensive? But before we get into that, let's talk about how insurance carriers make their money. So the obvious answer is premiums. Most direct way insurance companies earn money is by collecting premiums from policyholders. These premiums are calculated based on the risk associated with insuring the home, including factors like location, home value, and the likelihood of potential claims. Now, the other way that insurance carriers make money, and this is a big part of it, is investment income. So insurance companies invest a portion of the premiums that they collect, and while they're waiting to pay out claims, they invest in stocks, bonds, real estate, and other investments. And the income generated from these investments can be substantial and help offset the cost of claims. Rate increases from 2018 to 2023, the countrywide effective rate change in homeowners insurance premiums has increased by approximately 33.8%, according to insurance.com. And people are asking why, but it's a combination of several different reasons, but it is kind of simple. The main thing is inflation. This is the number one thing that is causing issues with the insurance market. So construction materials. Over the past 5 years, the price for construction materials have seen significant increases. Construction material costs have risen dramatically with an increase of over 35% since the start of COVID. Specifically, building material prices have surged by 19.2% year over year. You've got soft lumber prices have experienced extreme volatility, doubling at various points and showing an overall increase of 60.4% since September of 2021. The cost of steel mill products increased significantly, rising by 128% in 2021 alone. You have ready mix concrete that cost has increased by 12.6% since January of 2021. The increase in material prices are attributed to multiple factors, including supply chain distribution, increased demand, logistical challenges that were just exacerbated by COVID. And these substantial increases in construction material costs have had a wide-ranging impact on the construction industry, influencing the overall cost of construction projects and the affordability of new builds and renovations. You also have labor costs. Over the last 5 years, construction labor costs have experienced significant increases. The average annual increase has been around 3 to 4%. With notable spikes in certain periods due to various factors like labor shortages, inflation, supply chain distribution. For instance, the Employment Cost Index indicates that overall compensation costs for construction labor has risen by about 4.2% annually as of 2024. These increases reflect the ongoing challenges in the construction industry, including the higher demand for skilled labor and economic pressures. You also have reinsurance costs. So reinsurance is basically insurance for the insurance company. So this helps insurance companies assign some of their risks to the reinsurance company in exchange for a premium. And reinsurance rates have seen significant increases. The cumulative rise in reinsurance prices since 2017 has reached approximately 160% as of 2024. This increase has been driven by several factors, including a series of high cost natural disasters. For example, the global property catastrophe reinsurance market experienced a 3% rate increase on an adjusted basis in 2024, but that was following a substantial 37% rise from the previous year. So this trend reflects the continued robust demand for reinsurance coverage amid growing exposures and the need for additional capacity. Reinsurance costs have also been affected by inflation and rising interest rates. The increasing costs of claims and the economic impacts of disasters like Hurricane Ian have further pressured reinsurers to adjust their pricing models. And these are ongoing adjustments in reinsurance pricing that highlight the industry's response to heightened risk environments and the need to maintain financial stability, in challenging conditions. And one way that you can protect yourself from the rise of inflation on your homeowner's policy is by making sure that you include additional replacement cost coverage on your policy. So this will be an additional 25 to 50% of your current dwelling amount on your policy. So this way, if Lord forbid you have a house fire or something like that, and your dwelling amount isn't enough coverage to rebuild your home, they can apply an additional 25% of that dwelling amount to cover the cost of inflation and construction material increases. The second reason is really an increase in CAT claims. So CAT claims are catastrophic claims. And in 2023, that was a historic year for the number of costly disaster events in the U.S. with 28 weather disasters. These events range from hailstorms, floods, tropical cyclones, tornadoes, winter storms, wildfires, and surpassed the prior record of 22 in the year 2020. So that was tallying a staggering $92.9 billion in damages in 2023 alone. And our carriers are fleeing the states. So in the recent years, several insurance carriers have either ceased offering certain types of insurance or have significantly reduced their presence in Georgia. This trend is largely driven by economic factors such as rising construction costs, inflation, catastrophic weather events, and an increase in personal injury lawsuits. Farmers face regulatory action in Georgia after attempting to non-renew policies for homes with roofs that are older than 15 years, which was deemed a violation of state law. And the company was ordered to rescind those non-renewal notices, but had already taken steps to limit their new policies in the state. You have American National Group, this Texas-based insurer, decided to exit the homeowners insurance market in Georgia, along with 8 other states due to ongoing profitability issues exacerbated by inflation pressures and increased claims frequency and the competitive market conditions. Nationwide is not on your side. Nationwide paused writing new policies for certain lines of insurance, including homeowners and commercial property insurance in Georgia. This move was part of a broader changes across several different states to address financial stability and amid rising costs and catastrophic losses. But the good news is, at least we don't live in California. Now, I found a video while I was doing this presentation from the Patrick Bet-David podcast, and he is an ex-insurance guy and just happened to come across my feed while I was putting this presentation together. So I thought I'd play a little bit of this video for you guys. I'm not going to play the whole thing because they do kind of go off topic and start to get into political, presidential election stuff and all of that. But once they do that, I'll skip ahead to the relevance of it. But just an interesting video I thought I'd share with you guys since it popped up while I was preparing this.
Chris, we're not getting the audio on our end yet.
To move my state funds below the for ceasing operations in California due to rising climate disaster.
Can you guys not hear the sound?
It was pretty, at first we couldn't, and then it was just a little bit low. If it's not too lengthy, if you're able to start it again at the beginning, I can
Yeah,
hear it
sure.
now. It's just a little low.
How's that?
Good, but can you turn on the closed captioning as well? Do you see the button for that at the bottom?
Yeah.
50% for renters, or it will. Deterioration of surplus is anticipated and emphasized. Rate changes are driven by.
All right, guys, I'm getting text that y'all can't hear this very well. Is that right?
Yeah, unfortunately, I was able to follow it on the closed captioning, but I was having a little
Okay.
trouble with the audio.
Okay. Well, basically, I'll just kind of sum this up here. They are basically talking about all of these different carriers that are leaving the state of California, and these are carriers who have either stopped or reduced their presence in California. So you have, State Farm, Allstate, Hartford, USAA, Farmers, Kemper, Geico, and many, many, many others. So these are big players in the insurance industry, and they are refusing to do business in the state of California because this is not subsidized by the government. I mean, this is a for-profit industry, and if things are not, if basically if people are, if your city is riddled with crime, why are they going to cover your car insurance or your homeowner's insurance? If you live in an area where, in California, where you have green hills next to your house, why would an insurance company insure that? Because they know that wildfire season is going to come through and cause a problem for them. These are just some of the. This is basically one of the major states that are having problems. We are having problems as well, but it's not even close to what certain carriers like California and Florida have here. So several insurance carriers have stopped offering certain types of insurance or have significantly reduced their presence in Florida due to a combination of economic challenges, increased litigation, and the high risk of natural disasters such as hurricanes. Here are some of the notable carriers. So Farmers Insurance in July of 2023, Farmers announced it would withdraw from Florida, the Florida market, impacting around 100,000 homeowners. And this decision was included stopping new policies, but they continued some of them through the subsidiaries like Bristol West and Foremost. Southern Fidelity Insurance was ordered into liquidation in June of 2022, leaving around 80,000 policyholders needing new coverage. Western Property and Casualty went into receivership in 2022. United Insurance Holding pulled out of the Florida market in late 2022, affecting 200,000 policies. You got FedNat entered insolvency in September 2022 following the financial difficulties and the impact of Hurricane Ian. AAA announced that non-renewals for some policies, but they're not completely leaving the state. And Progressive announced plans to non-renew about 60,000 policies starting in 2022 due to the market conditions. So we're not the only state in the country that is experiencing these type of issues, but these are just two of the main players, and it kind of gives you an insight of why people are leaving the state of Georgia as well. So these exits have significantly impacted the availability of insurance in Florida, driving many homeowners to seek coverage through the state insurer of last resort. Now, the state insurer of last resort is called the FAIR Plan. And many states have this, including Georgia. The FAIR Plan, which stands for Fair Access to Insurance Requirements, is a program that allows high-risk homeowners to purchase homeowners insurance. People who get their insurance through the FAIR Plan are typically not eligible for coverage through a standard homeowners insurance market because their home is located in a high-risk area or they have other red flags that concern the insurers. FAIR Plans are a state-run program that are subsidized by private insurance companies. So a fair plan is slightly different from a typical home insurance company because it's a shared market plan. So rather than getting coverage from a single insurance company, several insurance companies cover you and your property in the fair plan, limiting the amount of risk that one company assumes. So if you have a claim, every participating company pays a portion for that loss. The fair plan homeowners insurance is intended to be an option of last resort. You cannot apply for home insurance through your state's fair plan as your first option because you'll have to prove that you've been declined by homeowners insurance carriers, several different homeowners insurance carriers. So these are major factors causing carriers to decline coverage right now in the state of Georgia. So you've got your age of the home. Some carriers aren't insuring homes older than 10 years old right now. You've got your age of the roof. Some carriers won't insure a home with a roof that's older than 10 years, even if it's a 30-year architectural shingle. Obviously, you got number of claims is a big one. Some carriers will count claims even if it's a $0 payout. And the customer's credit history is also a factor. It's basically how likely is this person to pay their bills. And so here are 10 tips to avoid cancellations or higher premiums. So number one, maintain your home. Keep up with routine maintenance to prevent small issues from becoming big claims. This includes plumbing, electrical systems, and the roof. Promptly repair any damage or wear and tear, such as leaks, cracks, broken windows. Improve your home security. Install burglar alarms, smoke detectors, and security cameras. Those can reduce the risk of theft and fire, potentially lowering your premiums. Ensure all your doors and windows have strong locks and those locks are reliable. Reduce risks. So remove any potential hazards like dead trees, cluttered yard, or poorly maintained sidewalks that could lead to an accident or claim. Install fire extinguishers and keep your home's wiring and heating system in good condition. Update your policy regularly. Check your policy each year to ensure it accurately reflects your home's value and any improvements that you've made. If you make any significant renovations or purchase any expensive item, you want to make sure that you're communicating with your insurance company and update that information. Maintain good credit. Obviously, many insurers consider your credit score when determining premiums. Paying bills on time and managing debt can obviously help, improve your credit score. That is a big one. Avoid frequent claims. So this is huge. So everybody, a lot of people are like, well, what is insurance for? It's for when your house burns down. It's for major things that happen that you can't afford to fix, So for minor damages, it might be better to pay out of pocket rather than filing a claim, which would lead to higher premiums. Choose a deductible that balances affordable premiums with manageable out of pocket, in case of a claim. You can bundle your policies. Again, many insurers offer discounts if you bundle homeowners insurance and other policies like your auto insurance with the home. Shop around. This is a big one. Regularly compare insurance quotes from different providers to ensure that you're getting the best rate. Some insurers will offer you a discount for long-term customers, but it's still good to compare rates periodically. Disaster preparedness. If you live in an area that's prone to natural disasters, if you're on the coast or, anything like that, consider coverage for, floods, even if you're not in a flood prone area. Install storm shutters and reinforce your roof can reduce the risk of damage in severe weather. Again, communicate with your insurer. Always be honest and accurate about information and your application and during claims, and inquire about any discounts you might be eligible for, like, for being a non-smoker or for having a new roof. I had a lady the other day who was shopping around, and unfortunately, I couldn't find her a better rate through our carriers, but I was able to help her by pointing out that on her policy, she got a new roof 2 years ago, but they never updated that on her policy. So her policy said her roof was like 15 years old, and she was able to go back to them and correct that information, and it brought her rate down substantially. So those are just some things that you guys can do to make sure that you're getting the best rate available. And basically, the question here is there a light at the end of the tunnel? And the answer to that is sort of. Again, going back to inflation is expected to stabilize gradually over the next few years, though the outlook remains somewhat mixed. According to the International Monetary Fund, global headline inflation is projected to fall to 5.8% in 2024 and further to 4.4% in 2025, driven by easing supply chain issues and restrictive monetary policies. These moderations suggest a path forward to stabilization, especially as supply chains recover and demand pressures ease. JP Morgan also research indicates that while global core inflation remains sticky about 3% in 2024, significant drops in headline inflation are expected, particularly in emerging markets where core and headline inflation rates are projected to decline by 100 basis points over the year. The World Bank also supports this outlook, noting that tighter monetary policies and declining energy prices are likely to bring down inflation rates across many economies. They project global inflation to decrease to 5.8% in 2024 from 6.8% in 2023, and further reductions anticipated in subsequent years. And the U.S. inflation cooled a little bit, but it's still above target, while the road to lower inflation is still fraught with challenges, including potential geopolitical risks and that persistent service sector price pressures. The general trend points towards gradual stabilization. So overall, the inflation is expected to stabilize. The pace and extent of the stabilization will vary across regions, influenced by local economic conditions, policy responses, and other external factors. So because of all of this, homeowners rates aren't really expected to lower much in the near term, but it's hopeful that the rates will at least stabilize as inflation does. So how can technology help insurance rates? So these are future technologies and stuff that's being implemented already. Advanced data analytics. Insurers are leveraging big data and advanced analytics to better assess risk by analyzing vast amounts of data from various sources, including historical claims, weather patterns, property characteristics. Insurers can more accurately price policies and offer discounts to the lower risk homeowners. You got your smart home devices. Smart home devices are smart smoke detectors, water leak sensors, and security systems help prevent losses before they occur. These devices can alert the homeowner and the insurer to potential problems, allowing for immediate action to mitigate damage. Many insurance companies offer a premium discount to homeowners who install these kind of technologies. You also have drones and aerial imagery. So drones equipped with high-resolution cameras provide detailed inspection of properties, especially in the hard-to-reach areas. This technology enables insurers to assess property conditions more accurately and efficiently, reducing the need for manual inspections and the costs associated with that. Blockchain technology. Blockchain enhanced transparency and security in the insurance process. It ensures that all transactions and claims are recorded immutably, reducing fraud and errors. This efficiency can lead to cost savings that insurers may pass to the policyholders in the form of lower premiums. Artificial intelligence and machine learning algorithms are used to automate underwriting claims processing. These technologies can quickly analyze claims and detect fraudulent activities and process payments, leading to faster resolution and lower administrative costs, which improve the efficiency and reduce the fraud, which helps insurers maintain lower premiums. Telematics and usage-based insurance. Telematic devices monitor your home system's usage and behaviors, such as energy consumption and security system usage. This data helps insurers tailor policies based on the actual usage and behavior, offering discounts to homeowners who demonstrate low risk profiles through their habits and their system usage. And then you have predictive modeling. So predictive modeling helps insurers forecast potential risks and claims. By using historical data and current trends, insurers can predict future losses more accurately and set premiums that reflect the true risk, and often results in more competitive pricing for the homeowner. So look, I've gone over a few of these things. I don't know how much time we've done. It's probably a little short because I had to cut out that video. But you know, the bottom line of this is inflation needs to get better before the insurance market gets better. And most of everything is revolving around that at the moment. And that while using an insurance broker, that's one of the reasons why you want to use an insurance broker to benefit you, because obviously we can shop multiple different policies and carriers and just make sure that you're getting the best rate available out there on the market. So again, I probably this probably went a little short because of that video incident. But does anybody have any questions about anything specifically?
Chris, don't worry, focus on the time. You did an excellent job, covered a lot of good material, and appreciate that.
Sure, absolutely.
I haven't had any questions come up in the chat window. One
Okay.
that you touched on that I wasn't aware of is I had heard of insurers of last resort sponsored by the state. I did not
Yes.
realize Georgia had one. I thought of it as, for example, flood-prone areas in Florida, California, and the like. Didn't realize Georgia had one. I'm assuming
Right.
that although insurance is available through the insurer of last resort, it's likely expensive.
It is. It is. And I had a lady who was moving down here from Virginia last month, I believe it was, and she was buying a $3 million house in Chateau Alon, and went through her claims history, and she had like 6 claims within the last 5 years, and nobody was going to offer her policy. I found one carrier that would, but it was over 10 grand a year. Um, and really, the problem with that was she filed so many claims that ended up resulting in a $0 payout. But those claims are still going to be counted by most insurance companies, because that's still money that the insurance company is paying to somebody who goes out to look at the damage. And, they're paying independent people to go and do that for them. So that's money out of their pocket. Even if it's determined that, it's not going to be covered, they're still going to count that as a claim. So people run into that issue a lot. And then unfortunately, sometimes it results in, the insurance of last resort, which again, as you said, is expensive.
Another quick question about prior claims history. When they're evaluating homeowners insurance, are they looking at all lines, including auto, or just homeowners insurance claims?
Just the homeowners insurance when they're evaluating the claims history on that. So everything, claims are specific to whatever policy that you're getting.
I ask that for personal reasons because my insurance, auto insurance, says that if you get a chip in the glass, even if you have a deductible on your comprehensive, they say we'll waive the deductible because we would rather fix a glass chip cheaply rather than wait to turn into a crack and replace a whole windshield. So I've had a
Right.
number of small glass claims whenever I get chips in the glass. Wanted to make sure it wasn't counting against me on the homeowner's side.
No, and then even the comprehensive claims typically aren't even counting against you on the auto side of it. You may see rate increases, but I mean that's just natural in the way things are going right now. But typically, if it's a comprehensive claim, it shouldn't impact your insurance rate.
Okay.
Yeah.
And tips for insurance shopping, other than using a broker who can access multiple types of policies and multiple carriers. In addition to that, is there anything else to consider to shop insurance to, one, make sure you can get coverage at all, and second, to get the best premium possible?
Yeah, honestly, it's important to shop around every at least every year. I mean, we had Progressive recently with certain people had like huge rate increases, and no additional claims or anything like that. It's just within certain areas they've kind of reworked their pricing model with certain zip codes around the around the state, and some of them got really big rate increases. So it's just one of those things that you really just want to check around every 6 months to a year, and make sure that you're getting the best rate available. And that's where a broker comes in that can do that for you for free, and just check around and make sure that you're getting the best rate available.
Does anyone in our audience have any other questions? If not, I'd like to thank Chris again for being our guest speaker today, and appreciate all the information on homeowners insurance. We will edit the video, post it to our YouTube channel, and link to it on our website under the resources tab. It takes a few days to a week for that to occur, and we send out an email, let you know when the video is available, or you can just check our website resources tab and find it.
Excellent. Well, thank you guys for having me. I really appreciate it. And if anybody has any questions, that's my office number. You can reach me anytime. And I appreciate you guys listening.
Chris, thank you again. We appreciate the information, appreciate you being our guest today. And to all of our friends in the real estate industry, wish you great luck in your real estate transactions. Let Chris Patterson with Lone Mountain Insurance, Doug Dean with Schaefertz and Dean know how we can help you with your real estate closings. Thanks again. Have a great day, and we'll look forward to catching you again soon. Thanks.
Thank you, guys.